link should be there. It should be MDJSK. MDJSK. So if you can jump into the Nearpod. Now, some of the learners had some issues with the Nearpod earlier on today, so hopefully, I don't know, it might have just been the internet playing up, but let's hope not. So MDJSK, if you can jump into the Nearpod, and we will get ourselves underway. As said, we're learning about the balance of payments, which is quite exciting. It's for those of you who are wondering how governments keep track of all of the payments that get made. When you consider all of the goods and services that get sold overseas, and then all of the goods and services that get brought back into the country, there's a lot of numbers with regards to that. And if you've got any family members who are in accounting, right? If you've got family members who are accounting until they take it all, all right? If you've got family members who are accountants, or you know people who are accountants, take down my shirt, they will be very familiar with this sort of idea. The idea is called double entry bookkeeping. And the people who organise this, it's like an international body who say this is the framework, this is how balance of payments should be recorded. All right? So we're going to have a look at it. All right? Very first thing, an introduction to the balance of payments. Please understand I'm going to use the shorthand code BOP for balance of payments. And you might see that online. You might see articles written about BOP. And it's not the 1980s dance move. Right? It is, in fact, the balance of payments. All right? So what we're going to need to do is we need to distinguish between. So figure out the difference between trade in what's called visible, right, exports and imports, and invisible exports and imports. I like that the language that gets used there, because invisible, it kind of sounds like ghosts. Ooh, spooky. It's almost October. We can ghost it up. Okay. All right. Key terms, and these are all on the site, and you can look through the site and double check these and add them to your glossary. So balance of payments being one, current account, the visible trade, invisible trade, current account surpluses, current account deficits. And just as always, it's the language that we use when we are discussing and answering the questions that could be important. Now, yes, it's entirely possible that there may not be any questions about the balance of payments at all, right, specifically referenced. But for international trade, the synergy of this, the connections of this, is that the balance of payments can be referred to when you're discussing macroeconomic objectives. So it could be you're talking about economic growth and you need to discuss the impact of changes in the balance of payments on economic growth. It could be you're discussing unemployment and you need to discuss the impacts on the balance of payments with regards to unemployment. There's a lot of connections, and then eventually we're going to look at the topic of economic development. And when we look at the topic of economic development, then we can see big, very strong connections with the balance of payments as well. All right. Now, just as a quick review, all right, so we've viewed it once, now we need to review it. We had said that international trade is good, all right, so to remind ourselves why international trade was good, all right, we said that we were able to buy all sorts of a wide variety of goods and services, right, so there's more choice available to you, okay. They are potentially a cheaper option, right? So you've got wider variety, cheaper prices. And it could be that those goods are resources, right? Factors of production that you're able then to get, and they might be new ones, different ones, or ones that are cheaper than the costs, than the resources that you could buy domestically, which might then therefore mean that you're able to gain more from economies of scale, improve your productivity of your production process because you're able to get these resources that are potentially cheaper. Trade should lead to more competition. And in economics, competition is one of our favourite themes. Right? We're very keen on this idea of competition. Competition in economics, we feel, breeds or brings efficiency. And we like that idea. It should be that businesses, because they're competing, are going to try and improve their products. So then you'd see quality improvements. They're going to try and supply more, so you're going to see quantity improvements. And they're going to try and better meet the customer needs. It might be that by being competitive, there's more innovation, more use of technologies, all sorts of different things that we in economics would be quite pleased, and we as consumers also would be quite pleased that would happen. So all good points for international trade. And we've also looked at the other side. We've looked at some of the negative effects of international trade as well. But if we consider these as good points, then we need to refer to the balance of payments and figure out what it is and how it actually works. So, very quickly, the balance of payments is the record of all of the financial transactions between one country and the rest. Right? So, whether it's Malaysia and Singapore or Australia and China or whichever countries you like to consider, they're all trading goods and services with each other, and they've got like a recording, right, somewhere of all of the financial transactions that are taking place. So, language again that we use, the first bit there to note, inflows, right, should be self-explanatory, okay? Just as when we discussed the circular flow of income, okay, we saw that when we sold our exports overseas, that led to our country earning revenue from those exports. So that's revenue, that's money coming into the country. So that's an inflow. So exports, although we tend to think about the goods going overseas, the income earned from that comes into the country. Outflows are going to be, again, exactly as writ. There's going to be money that is flowing out of the country. So just as with the circular flow model, we saw import payments. We saw that the imported goods came into the country, but we had to pay for them. So that payment leaves our circular flow model. So there's that balance between the two, right? And it was quite neatly expressed as X minus M. Your export receipts minus your import payments. That overall is what we know as the trade balance. Now, we haven't split it all up yet. We haven't discussed the individual parts of it. That is just what we know as the trade balance. It's just about the exports minus the imports. That's all it is. And a lot of what you are going to be discussing is going to focus in on that. Now, we do talk, again, it's that language idea that there are, when we are taking money into the country, the inflows, when we record them, because again, it's like we're accountants, right? When we record them, the inflows are going to be recorded as a positive number. So therefore, they are considered to be a credit. Right? When it comes into the country, it's an inflow, it's a credit amount, it's a positive number. When it is an outflow, it's leaving the country, so it's going to be a minus or a negative number, and it's going to be classified as a debit. Now, make sure you're not getting confused between the word debit and the word debt. Right, they're two very different words. Debit just means you are subtracting, you're removing. Right? Debt is about a repayment, right, for borrowing money, essentially. Right, now, in the balance of payments, one of the ways I like to think of the balance of payments is to think of it kind of like, if you imagine that there's a tree, right? You can all imagine a tree. And then the tree's in the ground, and under the ground there's like a whole lot of roots in the ground, okay? And they all kind of extend out from the base of the tree. So if you imagine the balance of payment structure as being kind of like the roots of a tree, Another way to think of it is like, those old-fashioned scales that you see. If you've been to America, Lady Liberty or Lady Justice, having the scales of justice, those sorts of old measuring scales. That's another way to think of it. I quite like the idea of the tree roots. That kind of visually appeals to me. Oh, someone's joined. All right, that kind of appeals to me. I think that's quite a good visual illustration. All right. But it may be that the idea of the scales, like the scales of justice, maybe that is a better image for you to attach to your understanding of the balance of payments. Inside that structure, right, there's a couple of things we need to know. First thing we need to know is that it is a balanced structure. Okay, the scales of the balance of payments have to balance. It's in the name, all right, and that becomes part of that idea of the credits and debits, the inflows and outflows. Okay. I've lost track of where it was I was thinking. All right. Any case. All right. So the idea is the scales have to balance. Right. So it's similar, if you will, to like a seesaw, and if you have both, equal weight on both ends, then it is in balance. And this is the idea. This is the one I was thinking. It's that double entry bookkeeping that accountants use. It's that same principle where the overall balance is effectively zero, okay? Because you've got positive numbers on one side and you'll have negative numbers on the other, and they balance each other out. So that's what we find happens with the balance of payments, okay? And yeah, there is a little bit of mathematical playing with the numbers, and some of that you're actually going to learn in IB, so you won't need to worry about that for IGCSE. Now, there are two major accounts under that structure. So like the tree structure, there are two major accounts, so one on either scale. Okay, one is what's called the current account, and the other is called the financial account. There is another account, it's a tiny one, it's somewhat in the middle, and it's called the capital account, but don't worry too much about that, that's very small. All right. Now the idea is these two accounts, the current account and the financial account, are going to balance each other out. So if your current account is negative, then your financial account has to be positive. All right? If your financial account is negative, then your current account, it has to be positive, because otherwise it doesn't balance. Okay? Now, as luck would have it, for your syllabus, the account you need to focus in on is the one underlined. It's the current account, right? Which is more or less exactly what you would experience with your banks, the bank that you have money with. Yeah, it is a current account. It is like an everyday bank account. All right, and the current account for the country is the one that your syllabus focuses in on. Now, when you get to IB, we're going to look at all of the accounts and what's inside all of them and all of the maths, etc., that accounts for all of the accounts and how they all balance and what happens if they don't and all of those sorts of things. That's an IB level understanding. For IGCSE, for IGCSE, all you're going to need to worry about is the current account. Right? By all means, if you want to know more, right, we can look at more. But all you really need to know is the current account, what it is, how it works, and where it all sort of fits. So, very first exercise for you to do is a close exercise. It is a close gap exercise. All you're going to need to do is to put the words into the sentences where you feel they best fit. So I'm going to give you about 30 odd seconds. Ready and go. Give you about another 10 seconds or so. Move the words into the spots, the gaps, where you feel they best fit. Ten seconds. Okay. So let's look at where the words best fit. Right, the BOP, the balance of payments, is defined as a record of all transactions of a country with the rest of the world over a period of time. Transactions are going to lead to an inflow of currency. They enter the account with a plus sign and are therefore known as credits into the account. Outflows of currency are accounted for with a minus sign and are often called debit items. The two major components are the current account and the financial account. All right, well done, team. Yep. Okay. The current account includes, here we go, visibles and invisibles. All right, and they are pretty much exactly as you'd think. All right, when we're talking visibles, we're thinking things that are going to be physical, they're tangible, they're the goods, all right? When we're talking invisibles, they're things that aren't going to be physical, that aren't tangible, they're going to be the services. So we're looking essentially at a balance of goods and a balance on services. And when we add those two balances together, then we're going to end up with an overall current account balance. Now, it is called a current account, but it's got nothing realistically to do with raisins unless you are exporting or importing raisins. No! I quite like that joke because it's currants and raisins. Although quite clearly it's a current account, it needs to be kept up to date. Think about that, it needs to be current. All right. If the current account is negative, then we say, the words we use, the language we use is that the account is in deficit. And again, I've got to stress, we're going to use the word deficit, we're not using the word debt. There is a bit of a trap for young players, is that they'll get those two words confused. You need to see that the deficit is simply you're paying more than you're earning. That is a deficit. Okay? If it is positive, if that current account balance, once you add it all up, if it is positive, then the phrase we use is that it is in surplus. Okay? So, your next task fill in the blanks, close exercise, put the words into the sentences where you feel they best fit. You've got about 30 odd seconds starting from now. about another 10 odd seconds. Put words into the gaps. Right. Okay, we won't spend long on that. Okay, so we need to get quick with our moving of the words. Here we go. Current account includes visibles and invisibles. So the trade in goods and in services. The sum of the visibles and invisibles is known as the current account, right, as a balance. If it is negative, then the current account is in what's called deficit. Okay, that's no problem, Lancelot. Understand. If it is positive, it is referred to as a current account surplus. Right? I am, as before, recording the session, and hopefully, and the plan is to put the recording up into the classroom for you to access, so that later on you can go back, you can check, you can add extra depth to your notes, and all of those sorts of things. However, a word of note. The last recording that I didn't work for the other Year 11 cohort. I think it's a problem with the memory and the capacity of my computer. So if it doesn't work, then we will work something else out. But just to let you know that that's having some issues with the memory size in the computer, I believe. I think that's been the problem. Right, but I'm doing a bit of an experiment now just to check to see that it will all work. All right. If we break it down and then we look at each individual component, okay? So the first one is that visible trade. That's all about goods, okay? Remember, the goods are physical, you can see them, they're tangible. Another way to describe them. An old-fashioned word for goods was merchandise, right? And you're familiar with that word because sometimes we still refer to people who have shops as merchants. And you'll remember that we use that same phrase when we talked about the mercantilists and their philosophies on trade. Okay? So merchandise. So in case you're online and you're looking up information about the balance of trade, and you find something that says the balance on merchandise trade, because merchandise is the old-fashioned word for goods. So what they're then saying is the balance of trade in goods. Right? So if you see the word merchandise, know that they're meaning goods. Okay? All sorts of things can be goods, as you understand. Right? And we can import and or export a whole range of these goods. Right? Lots of them. And it could be resources, it could be finished products, anything that can be counted as an actual physical good would fall under this category. And yes, there are problems nowadays because everything's online and you're buying things online, and there's more of that sort of independent trader, and do we know that the information has been accurately recorded? Is it going through to the government and their accounts? It's a bit more tricky, right? Are they paying in Bitcoin? And who knows how much that is, and all of these other sorts of ideas. So visible trade is all about the balance on goods. Whereas, as we said, the invisible trade is all about the trade in services. So if you like, it's a balance on services. So it could be written up as the balance on invisibles, or it could be written up as the balance on services. So they mean the same thing. So again, if you are looking at probably old books, but if you're looking at old books or news articles that use the old terminology, the old language, then they might actually refer to it as the balance on invisibles. Okay? So that's all about services, and this gets a bit confusing for learners because services can be exported, services can be imported. Right? Think of these examples: insurance, banking, tourism, even something as simple as education all of them can be potentially exported and or imported. And we don't often think about them like that. Right? Transport, right? All of those container ships travelling around the world, that's a service. Right? And therefore it has either been exported or been imported. Yeah? Education. Okay? You're at an international school. Malaysia is importing education, right, to a large extent. Tourism, that's a classic example, tourism. Tourists who arrive in Malaysia, obviously at the moment not, okay, but if a tourist arrives in Malaysia, they will bring money from overseas into Malaysia. And they will buy things in Malaysia. They will pay for hotels. They will pay for transport. They will pay to go and see the Twin Towers. Yeah, there will be a lot of services that they are paying for. And the idea of tourism, it might be a package deal. Yeah, transport to the hotel, 4 nights in the hotel, shopping at this. Yeah. And a trip up the Twin Towers, whatever it is that sort of package entails. So somebody has paid for that from overseas, so that is an import, right, for them, but an export for Malaysia. In some countries, tourism is very, very big, and they may not be the countries that you think of. I mean, ones that I can think of that come to mind very quickly is countries like Thailand, where tourism is a substantial part of their economy. Right? There are other economies around the world where, again, tourism is a very, very big part of their economy. One that's quite close to New Zealand, there are islands near Fiji, for which pretty much their entire island is based around tourism. Right? And even countries that you don't necessarily think of as having big tourism can be tourist countries, right? New Zealand. There is a lot of tourism that goes to New Zealand because people travel to New Zealand because they're wanting to go and see the sheep, right, and the hills and the hobbits. Okay, that's how that sort of works. Yeah. All right. So the trade and services, the key word there is that they are classified as invisibles, and there could be a whole range of them. Right. Now we're thinking about them together. So we need to think about how the balance works. So a balance of trade in goods. You're going to be taking the visible exports and you're going to minus the visible imports. So you're going to exports minus imports, but it's the export of goods minus the import of goods. So on a sort of a more mathematical equation, if you like, export of goods minus import of goods. And that will get you the balance of trade. Some people say the balance on trade. I'm not entirely sure of the exact correct English for it, but I've referred to it as the balance of trade for most of my life, so that's what I'm going to refer to it as. So the balance of trade, or BOT, right, the box, export of goods minus the import of goods. And as said, sometimes they can refer to it as the balance of merchandise trade, so you might see BOMT. I wouldn't worry too much about that, so long as you understand that they're referring to goods. So you can create little mathematical equations. You could have a table with some data in it, and you need to work out what the balance of trade is. Right, that could be 4 marks. Quick, easy, done. Right. And just as with the overall balance, if we see that the value of imported goods is greater than the value of the exported goods, then that's going to be a deficit. And likewise, if the value of exported goods, or conversely, is greater than the value of imported goods, then it's a surplus. We're still using that language, that terminology to understand it. All right? And if we work out the balance on services, So instead of the balance on trade, we've got the balance on services, right? Also known as the BOS. No? That might be mum or dad at home. It's the boss. The balance on trade, or otherwise known as the balance on invisibles, or the balance on invisible trade, it's the same idea. Right? Is going to be equal, and again you can do a little wee mathematical equation, the export of services minus the import of services. Just like that. And again, there could be a table with numbers in it, and you have to work that out. Yeah, it could be that they've got the numbers worked out, and you might need to work out a percentage change. Right? Because they might want that for some reason. And then for you to explain what has happened, I think there's been an increase. Yeah? There's more exports than there are imports, therefore there is a surplus. There's more imports than there are exports, then there's a deficit. And as long as you use the terminology, then you're fine. Right? Again, if we start talking about debt, the examiner is going to know that we don't know the words, the language. All right. Now that's quite a lot for you to take on, but I think there's just one more I'd like us to think about. And it's this idea here that we talked about the government's macroeconomic objectives, and we talked about unemployment and inflation and economic growth. Well, this is the last one. Well, kind of, right? This is the idea of a favourable balance of trade. It's not specific. It's vague, right? It's not like there's an unemployment number or an inflation number that we can target and say that's the number we want to get to. There is no number. It's just that for the government, we want it to be favourable. We want it to benefit us. So you might make an argument that says that what favourable means is if we're in surplus. You might make an argument that says favourable actually means to have a balanced balance of trade. You might make an argument to say that favourable actually means having a deficit but having a small deficit or a temporary one. Okay, so it will depend very much on your argument as to whether you feel that whatever the balance of payments is actually favourable, right? Because they have deliberately not put a definition for what favourable means. Each government is going to come up with its own interpretation of what favourable means, which is why you can see some governments will have a different view on trade to others, because they will want more trade or less trade, okay, depending on who the people are. Right? We need to make sure that we are 100% comfortable with saying this. The overall balance structure, the overall current account, when the value of exports is greater than the value of imports, it is in a surplus. Right? So with those accounts, you add the accounts together, right? Balance of goods plus balance on services, and the overall account for the current account, right? If it is in negative, it's going to be in deficit. If it is positive, it's going to be in surplus. And so therefore, if it's negative, it's a deficit. And all you're doing is you're just adding together your balance of goods plus the balance in services. Right? The rest of it is just a language game, right? Invisibles, visibles, surpluses, deficits, yeah? Credits, debits. It's just knowing the language and knowing how to use it. So what does it mean if we have a deficit? Well, it could mean, because we referred to aggregate demand, and we remember aggregate demand, C plus I plus G plus X minus M, right? Because we talked about aggregate demand when we were building economic growth, right? We talked about aggregate demand when we were building a circular flow model, right? All the way back in year 10. So there, right, is our balance on trade, our current account. It's part of aggregate demand. So if we have a deficit here, there's a chance that we're going to have a fall, a decrease in aggregate demand. A chance, because, I mean, you've got to take these other things into account as well. All right? So we can't say definitely that it will lead to a decrease in aggregate demand. We can say there's a chance of that. We can also note that money is leaving the economy because it's in deficit. So that's an outflow. There are debits. The debits are greater than the credits. The money is leaving the economy. And we could also suggest that the people who work in the industries within the economy, the domestic industries, there might be some unemployment occurring there because of the level of competition, because the reduced incomes being earned, and less spending on domestically produced products, so therefore reduced employment. Yeah, you can make that as an argument. You can have a however, right? And you can note things like, well, what about the people who work in the industries that are importing? They get more income, they get more jobs. You can make an argument that the imports might be vital to the production of ... because they're raw materials, so therefore, you're going to get that. Okay? Right. So we can see some negative effects on the current account negative effects on the economy overall if we have a current account deficit. There are some. Now, here's what I want you to do, a little bit of a research challenge. I would like you to look up, ask Dr. Google, what is the US balance of payments on the current account? Just the current account. Don't want to know the rest. You can ask Dr. Google, what is the US balance of payments on the current account? You can either think about per quarter, you can think about per year, over time, whatever you've got. See if you can find out what number that is, because then it's an argument of how big is it a surplus, is it a deficit, and does the size of the number, or the fact that it's a surplus or deficit, does that actually surprise you? So you've got a couple of seconds, have a go, fast as lightning, into Dr. Google, and put the answer that you find into the chat, please. Asking Dr. Google what the US balance of payments on the current account is. What numbers are we looking at for that? Oh, here we go. So I'll be put down here. 576.3 billion. COVID pandemic has had a dramatic effect on imports and exports over 2020. Yeah, I would agree with that. Absolutely has. So did you figure out if that's a surplus or a deficit there, Abu? Deficit. Now, I don't know about you. I don't know if... I know we looked at the US economy before, and we've looked at their levels of growth before. But just look at that number. 576.3 billion. Billion with a B. That is bigger than a number of countries' entire GDP. It's at least 2 times the entire GDP of New Zealand. So all of New Zealand's income, if you added every single thing up, that's more than 2 times New Zealand's entire income. And that's just their balance in trade, or their current account. Yeah? That's remarkable. Does that surprise you? That they're in deficit? And does it surprise you that it's that much? There you go. Abu's found that the trade surplus in China was 58.3 billion US dollars in August. Do these numbers surprise you as to how big they are? What do we think? Not surprised? Nah, that's what I thought. It'd be about that. Yeah. What about other countries? Anybody know what the current account balance for Malaysia is? Was it in surplus or deficit? Okay, last thing you're going to do today for me. Someone to find out if the Malaysian economy is in a surplus or a deficit, and its current account, and by how much. Here we go. Quick off the mark there, Abu. Well done. Surplus to Malaysia in the current account, apparently, 159 billion. Or in ringgit. Okay. That seems quite a lot, I would say. Again, I'm not sure if you're surprised by these numbers. I'm not sure if you are surprised by the size of them. Maybe you're not. Maybe you just kind of expect them to be that big. Right? Maybe you just think, oh yeah, that sounds about right. Okay. Now, team, we're going to finish up there today, and we'll pick up from here next time when we next meet. Please, please, please ensure that you are doing regular revision. Bite-sized chunks, going through the work, the specific learning objectives, looking at your red, amber, and green, and looking specifically at your reds and your ambers, and saying, I need to work on these, and working on them. All right? Do some bite-sized chunk revision regularly. Make sure that you are engaged with elearneconomics.com. All right, you got sent a registration code for that. The school has paid for your subscription. You can work your way through it, all right, regularly. Yes, it's not IGCSE Economics. It's not. It's just economics. But sometimes that's quite good. All right? There are a whole bunch of multiple choice questions in there, and they kind of randomize them. They change them. All right? So please use the site. It is very, very good. Also, past papers. Just download a whole boatload of them. I know some people have gone to, like, in the past, at any rate, maybe not at the moment, but they've downloaded a whole lot of past papers, and then they've gone to like one of the print shops and got them all printed out and put them into a book. So that they've got all these past papers in a book. All right, I will. I'll show my screen. I'll take this one off. Now, the one I want to show you is called, here we go, Teachify Me. I was doing it just before. Now, there are a whole range of sites out there that you can go to, and I just want to go through this with you just ever so quickly. I'm hoping you can see my screen. Yep. Okay. So this is called teachifyme.com. And it has an economics section, and has other subjects as well, by the way, just to say. And I like it. It's one I have liked. I've used others. I've used Papa Cambridge and one or two others as well. But I quite like this. Okay, things it does, it has some basic notes in here for some of the microeconomic topics in particular, and then it has the past papers. Right, so I want to just scroll through just some things just so that you understand. Right, so the 0455 code, we're familiar with that. That's the Cambridge code for your course. So the other thing you can do is just type that into Google and go past papers 0455, and who knows what will come up. All right. And then when you look through subject sites like these, you'll notice that they have these like little S19. So that's 2019. Okay. And then it says question paper, QP, question paper. And then it has 13. And you'll notice that there's a 12 and there's an 11. So how the coding works is the first number on all of these is the paper number. All right. So these ones are paper number 1. All right, so question paper number 1, that's your multiple choice. Right. The second number, so 1, 2, 3, is the zone of the world, the region of the world that sat that particular paper. Now you guys are in zone 2. So yes, you could exclusively focus your attention on zone 2, but if you're wanting more papers, you could look at the zone 1 papers and you could look at the zone 3 papers. All right, you do need to be a little bit careful if you're looking at mark schemes and stuff, because there's some, and I can help you with that, some little tricks with the mark schemes, and I can help you with that. But yeah, so that would be paper 1 from zone 1, paper 1 from zone 2, paper 1 from zone 3. So you can actually, triple basically the number of papers that you have. They're going to be very similar because they don't change them too much between the zones. All right, then you've got this one here, it says 2-1, this one 2-2, this one 2-3. So this is paper 2, zone 1, paper 2, zone 2, paper 2, zone 3. So the paper 1s are your multiple choice, the paper 2s, as you're familiar with, those are your extended response papers. So you can just download a whole boatload of them, and you can just work your way through them. Now when it gets down to here, you'll notice this one says MS. MS is mark scheme. So that gives you the marks. Now, it doesn't give you the answers, or it does for the multiple choice. They're the answers for the multiple choice. For the extended response papers, it doesn't give you the answers. It gives you what's called suggested solutions, which means, because that's how examiners work, right? There could be a range of possible answers. Here's some suggested solutions, but it is also possible that you may have written something that isn't there, but might actually be correct. So if you get confused with that, as to whether your answer is correct or not, and you can't see it in the mark scheme, the best person to ask, other than each other, is me. All right? And we can have a conversation about that. And it goes all the way back. See, it's all of these. Now, you do have to note that you get past 2017, 2016, you're going to end up in the old syllabus, so there will be some questions in there that don't fit with your particular syllabus. So again, if you're not sure, you can ask. And then it's got some specimen papers and the like in there too. All right, so there's a whole boatload of things in there, and this is, as I say, this is just one website. There are a range of them that you can use. So please consider those, all right, and have a thought about your revision materials, what you have, what you need. Start downloading, start working through individual questions. But please, please, please log yourself into elearneconomics.com. If you get stuck, if you can't figure out how, let me know and I'll do my best to help you. All right? But you can guarantee that when you come back into school, one of the things I'm going to ask you to do is to log into elearneconomics.com. All right, so that I can see that you've done it. All right? Because it is a very, very good site. Right, team. Otherwise, I would like to say, hey, Kornera, if you have any particular questions, you can stay online or you can send me an email. Otherwise, there's the practice, the mock exam website as well that you can go through. There's a whole boatload of resources in there, including past papers. There's the worksheets, and there's also graphic organizers, and there's some video clips that you can watch. So again, it's that bite-size approach. Don't spend hours and hours trying to do that. That's just going to overwhelm you. But look at your specific learning objectives. I need to work on this particular topic. I'm just going to spend an hour on that topic and then stop. Right? Then do some work on your maths and your science and your whatever else is. Right? Try to avoid what used to happen in the old days, where students would spend like an entire day revising maths and an entire day revising science and an entire day revising economics and whatever. Try and avoid that. Try and break your day up. Calendar your time. You know when your exams are. You know when they are. So just work back from there and say, I need to cover these specific learning objectives on this day. And the more time you give yourself in that calendar, the easier it will be, because you're spreading the knowledge out over, the required knowledge out over all that time. If you wait until the last minute, then you're going to have this much to learn in a very short period of time, and that will be quite stressful. So try and balance your time out. Right? Little bite-sized chunks every day. Small thing, I'm just going to learn this. All right, let's look at the market model, let's look at equilibrium, let's look at what happens when there's a price ceiling and a price floor. Done. Excellent. Let's look at the market model. The next day I'm going to look at subsidies and taxes. Done. And just to build up your confidence as well and your speed at being able to answer, see the question, work out what the question is and answer it. And again, if you have any questions, feel free to stay online or see me in class when you come back to school, or also you could email me. Otherwise, team, hei kōrera, have a